Imagine a United States without the IRS. No audits, no complex tax returns, and a simpler, fairer system for everyone. The idea of abolishing the IRS while keeping the country profitable and stable isn't just a fantasy. Today, we'll explore a revolutionary plan using a national consumption tax and proven global strategies to replace income taxes. This system would streamline taxes, eliminate waste, and drive economic growth. Let's break it down step by step. 1. Replace income tax with a national consumption tax, FairTax. The first and most critical step is replacing federal income tax, payroll tax, and corporate tax with a fair tax. The fair tax is a national consumption tax collected at the point of purchase on goods and services. Here's how it works. 1. Flat rate. A single tax rate, around 23–30%, is applied on retail purchases nationwide. 2. Prebate system. Every American receives a monthly prebate to offset taxes on essentials like food and housing. 3. Exemptions. Services like healthcare and education remain tax-free to reduce the financial burden on families. Benefits of a national consumption tax. 1. No audits or tax returns. Taxes are collected at the point of sale, eliminating the need for audits or enforcement agencies. 2. Encourages savings and investment. Since only spending is taxed, people are motivated to save, invest, and build wealth. 3. Fairness. Wealthy individuals who spend more contribute more, while low-income families are protected through prebates. 4. Transparency. Everyone sees the taxes they're paying, reducing fraud and government overreach. Challenges and solutions. Some argue that a sales tax could hit lower-income individuals harder. However, the prebate system ensures that basic needs remain affordable. Transitioning to this system would require public education and a phased implementation plan, which we'll cover shortly. 2. Implement a value-added tax, VAT. In addition to a national sales tax, the U.S. could adopt a value-added tax, or VAT, widely used in Europe. A VAT works by taxing goods and services at each stage of production and distribution. How VAT works. 1. Businesses collect a tax at every point where value is added, like manufacturing, distribution, and retail. 2. The end consumer pays the final cost, which includes the accumulated VAT. Benefits of a VAT system. 1. Steady revenue. VAT generates consistent income, ensuring government programs remain funded. 2. Harder to evade. Since the tax is collected in stages, avoiding VAT is far more difficult than income tax. 3. Globally proven. Over 160 countries, including Germany and the UK, successfully use VAT to fund public programs. To protect lower-income individuals, essential goods could be exempt from VAT or included in the prebate system. 3. Streamline government spending. Placing the IRS also requires cutting wasteful spending and making government operations more efficient. Key strategies include: 1. Zero-based budgeting. Every government program must justify its costs annually, reducing unnecessary expenses. 2. AI and automation. Implement advanced technologies to streamline systems and reduce administrative waste. 3. Privatization. Outsource non-essential services to private companies to improve efficiency and save taxpayer dollars. 4. Drive economic growth with incentives. Eliminating income and corporate taxes would create an environment where businesses and individuals thrive. 1. For businesses, lower tax burdens encourage companies to reinvest, create jobs, and boost wages. 2. For individuals, more disposable income means increased consumer spending and personal investments. Countries like Ireland and Singapore implemented business-friendly tax policies and experienced massive economic booms. 5. Reform social program funding. Social programs like Social Security and Medicare currently rely on payroll taxes for funding. Under a consumption tax or VAT system, 1. A portion of the revenue from sales tax would be dedicated to funding these programs. 2. Additional reforms like raising retirement ages and incentivizing private savings could ensure long-term sustainability. This keeps critical programs running while transitioning to the new system. Implementation plan. How we phase out the IRS. Transitioning to this system requires a clear, phased approach. 1. Legislation. Congress passes the FairTax or VAT bill, abolishing federal income and payroll taxes. 2. Prebate rollout. Monthly prebates are introduced to offset taxes for essentials, protecting low-income families. 3. Public education. Nationwide campaigns educate citizens on how the new system works and its benefits. 4. Revenue monitoring. Advanced AI systems track tax collection, ensuring the rates are optimized and revenue goals are met. This gradual shift would take 2 to 3 years, giving businesses and individuals time to adjust. Real-world examples. This isn't just theory. Similar systems have been proven in practice. 1. FairTax, a proposed solution in the U.S. that simplifies tax collection and eliminates audits. 2. VAT in Europe. Countries like Germany use VAT successfully to fund government programs. 3. Texas model. Texas has no state income tax, relying instead on property taxes and sales taxes for funding. These examples demonstrate that replacing income taxes is possible and sustainable with the right policies. Conclusion: is it time to eliminate the IRS? By replacing income taxes with a national consumption tax or VAT, we can create a simpler, fairer, and more transparent system. This approach eliminates audits, reduces government overreach, and boosts economic growth by taxing spending, not productivity. If you found this video thought-provoking, hit that like button and don't forget to subscribe for more solutions-focused content. What are your thoughts on eliminating the IRS and implementing a national consumption tax? Share your opinions in the comments below. Together, let's explore how innovation and AI can create a more efficient future for everyone.